watching Stockwatch with me, Juliette Televi, and joining me to take your stock-related questions this evening are Wayne McCurrie from F&B Wealth and Investments and David Shapiro from Sasfin Securities. If you'd like to send questions, please email stockwatch@bdtv.co.za or via SMS on 41392. David, Wayne, good evening to you both. I missed 2 weeks of what has been a really stonking time on the market, which not necessarily the currency, which has been all over the place, but today was a great day. David, if I may start with you, the Perma Bull. We had a really good finish on the JSE today, up 1.7%, but mainly the resources stocks, although actually the retailers did pretty well too, especially those that went ex-dividend and were flat on their performance, like Mr. Price.
Yeah, we're still not behind. We're still not above January 23's all-time high. We're a few points behind, but we're getting there. This is the high of the year. And Juliette, if you looked at the depth of the market, I think there were very few losers. It was all gainers. And I think one of the drivers was that the dollar. You've got to look to the US to see what's happening. Disappointing numbers, disappointing data. And this is pointing towards rate cuts, September or whenever. Dollar came under pressure, commodity prices went up, and I think that was the trigger. So I think we're going to get more of the same. I think there's going to be more of the same going ahead as well. So it's global markets. The US, as we talk now, is at another all-time high. Tomorrow's a holiday there, but very, very strong. So strong global markets.
Wayne, does that make you less keen to invest in global markets, seeing as, US markets at all-time highs, and more keen to pump more money into the local market, particularly given our government of national unity, although in Gauteng things are somewhat in tatters, so I'm not quite sure how that's going to affect the political situation. But would you be happy to put more money here?
Well, look, Gauteng's got to toe the line of, I suppose, what's been agreed right at the top level, but we'll see what happens there. Yes, simplistically saying yes, but mainly, if I'm right, and this is a stuck record now for what seems an eternity, we should get a commodity upcycle. Maybe this is the start. We've had 2 or 3 false starts so far over the last 6 or 7 months. But if this is the start, there's way more to come from the commodity shares. And so the simple answer is yes. Every now and again, let's say every 6 or 7 years, you get a time period where commodity shares just literally outperform everything else because they're coming off such a bombed out base. Of course, you must remember to sell if it does happen. That I would say, hopefully we are there now. Hopefully the interest rate cuts come, and hopefully the global economy picks up and commodity prices pick up. And yes, that's the time to do it. The rand should strengthen under that type of environment. Fair value is somewhere around probably 1750, between 17 and 1750. And, literally a few days ago, we were, at 1790. Now we were at 1850. Now we're back at 1830. But, the rand's been testing this 18 level now. I'm just having a look here quickly since essentially the first quarter of 2023. It's been sitting. And hopefully we do get the breakout and the rand actually strengthens down to what I perceive to be fair value. Of course, then you must take money overseas. But I don't think now.
Okay. Although I have to say, having been to Germany for 2 weeks, it really doesn't. The pain is sort of as bad whether it's 1980 or 1918. So it would be a lot different if it were 10 to the euro and not basically 20. So that kind of that pain is there nonetheless. There's a question on silver, just given that you're both speaking on some commodities, and every now and then you get an occasional silver bull, and the viewer says, can I please have the panel's view on silver as an investment, short term and long term? Let me ask David first, and then I'll go back to you, Wayne.
Yeah, Americans love silver. Whenever they bought gold, they bought silver as well. We've never really had any kind of feeling for it. But what's also brought silver into the forefront has been solar panels. And I think silver is used in the manufacture and has also given it a kind of new life. for some reason, I write it down every day, but the numbers never stick in my mind. I
About
never know
$30?
whether it's going up or down or so on. I look at gold and other commodities, but for some reason I make a note of it, but I have no idea whether it's gone up or down or so and so. But I don't know. Silver's like uranium. It's going to hurt you.
It's $30.51 at the moment.
It's at a 5 or 6 year high, very similar to gold. So the price pattern doesn't actually look all that different to the gold price, as David was saying. And as you also said, Julieta, every now and again, after a big run, the silver bulls come out.
But
I wouldn't put money into it. I think there's better value in platinum, way better value in platinum.
Because the interesting thing about David's inability to remember the silver price, it always feels like it's sort of mid-20s. So $25 to $30. I mean, I don't know if I can get really excited about that, to be honest, even if it is at a multi-year high. Okay.
Yeah, I don't. But look. I mean, silver's never been part of our investment equation. It really hasn't. There've been no silver companies for us to buy.
Yeah, Kodachrome, I think. Remember when we used to use an old camera? You never used a digital camera and used to go and print. I don't know. Silver was used there as well, but I've got no idea what they use it for.
Okay,
So,
I'm sure there's Europa Metals, which is listed, and I'm sure. Oh, well, okay, I'm sure, but maybe I'm not 100% sure that they have some silver business, and they're listed on the JSE. There's a question on AfriMat, speaking of smaller companies, and the viewer says, is AfriMat still a good buy at current prices, or should one wait for a pullback? Is there enough upside left if you go in now? The wisdom of the panel, please.
We discussed it last week when you weren't here, I think. We have got the same question, if I'm not mistaken.
Well, it's
Wayne?
It's a new question.
David,
Well, it is a question that came through today, put it that way.
Last week. No,
You asking me to remember what happened a week ago.
Yeah. But it's look, it's a very good operation.
Yes.
And I'm just looking at the share price. I just had a quick swizz at it and said, I think at an all-time high. I always look at AfriMat because I followed it from the time that it came on during the construction boom. And you're going to have to check me on this one, but I think that this over time has given Capitec a run for its money. If you go to its listing, it might have lost a little bit of kind of momentum the last few years, but overall, it's been an incredibly well-run business.
Yeah.
And now they're going from construction, from aggregates and what they did more into mining, construction mining, or I think that they're in iron ore and what's the other? I don't know if they've gone.
Well,
Lafarge.
They've got Lafarge.
Lafarge.
They have branched out. I mean, they like to actually see themselves as they're more of a mid-tier miner. With aggregates and construction materials necessarily than a play on construction.
Look, I mean, it's a relatively small company. I mean, it's not minute, but it's a relatively small company. But, the price-earnings ratio doesn't look too bad. The earnings grew 25% at their last reporting period. But the share price has run hard. I don't know whether you ever wait for a pullback, because with good companies, you don't get a pullback that often. Maybe if you want to invest 20,000 Rand, put in 10,000 now and wait, maybe you do get a pullback.
Yeah.
This is one company you can rely on management. They haven't let us down.
No. They've been unbelievable. And actually, I'm just looking at their 2007 pre-listing statement. They listed at 5 Rand a share, and they raised 75 million Rand. That was their capital raising targets back in 2007. And there were a lot of listings in 2007, and I don't think there are many that made it out alive. So well done to them. To a much bigger company now, and that's Absa. And the viewer says, can you ask your panel if Absa is a buy now after the weak report that came out last week? Wayne, are you still, if you had to rate the banks, because you've got a few options here, where would you put Absa?
So rating the banks, unfortunately for Absa, they look like the worst bank. Okay? But they are also by far the cheapest rated. So the question is, how much bad news is in the price? Yeah, you've got this rare occasion where a well-established company, Absa is not going to disappear tomorrow. It's a well-established company. It's been around for a sustained time periods with good and bad and everything. But you've got this fairly unique situation where the dividend yield is significantly higher than the price earnings ratio, which just gives you an idea how much bad news is in the price. So maybe if you want to take a punt on a deep value type of investment philosophy, why not? I mean, the voluntary trading statement. One thing I've learned about voluntary trading statements, they're either extremely good or extremely bad. And this was the second one of that.
Yeah. But, Absa seems to have been a disappointment. I feel like for a decade now, at least.
Yeah.
Maybe the last time we could really get excited about Absa was when Barclays made an offer to buy it.
Yes. Look, I will say in Absa's defense, they negotiated the separation from Barclays without any major problems. And that in itself was a major achievement. Yeah. But yes, it has been a bit of a disappointment.
David, your thoughts on Absa? Would you prepare to put money behind it?
Yeah, it's been a perennial underperformer. The other banks always just seem to be kind of a little bit ahead of them. I can't criticize management or anything. I think it's almost historical from the old time of the Trust Bank and so on. Never had quite the kind of appeal of a First Rand or a Standard Bank. Even Capitec seems to have a lot more charisma than Absa. But they're steady. They're okay. But if it came for choice, I'd go for Standard or First Rand. Even Nedbank's okay.
How about Capitec?
I like Capitec. I know it's expensive. I know it's very expensive, but still, those expensive stocks keep getting more expensive.
Yeah, sadly, for those of us who don't own them.
Just quickly, because while Wayne was talking on Absa, I went on to AfriMat, and if you've held it from over the last 15 years, your annual return has been 25%.
Wow.
25.3% per annum over 15 years.
Yeah, that's a stonker.
Yeah. And look, it's been from 22 to 23, 24, it's been tough. But, it's back on track. So looking at that gives you an idea of how well this company has done.
And David has had time to look at Capitec's annual return since listing. When was that? 1998 or 2000?
Yeah.
Okay.
I only went back 15 years, so over the past 15 years.
Okay, so give us the number.
Over 32% per annum. That's what it works out. And I haven't used total return, so forgive me. I just used the share price, so I'm not.
Well, the dividend wasn't great.
Yeah. But on both AfriMat, so AfriMat 25% odd, Capitec 32%. So there are some counters that have matched the kind of returns that you've got on some of the overseas businesses.
Yeah, I know, astounding. Okay, what about Bidvest Bank? And a viewer sent us a question about the Bidvest SENS today, saying, may you please ask the panel about the update, the acquisition on Citron and the restructuring of the financial services division, wherein essentially they're looking for a buyer for Bidvest Bank. Wayne, you tweeted about this. Firstly, do you think it's going to make much difference in their lives in terms of any sort of cash injection if they manage to sell Bidvest Bank? And who do you think they might sell it to?
Look, I don't know who they're going to sell it to, and this is my stock pick, so I might as well get it over and done with now. I mean, just on selling the bank, not easy owning a bank. It's not easy complying with bank regulations. It's not easy out there in the marketplace because there are serious and very large capable competitors in this market. That's why I worry a little bit about everyone launching financial services. There's already a very crowded market here. I was always surprised, and this is years ago now, David might even know, 15 years ago, when Bidvest launched the bank, I thought, why are they going into banking? What is so attractive about this? Now, they had great pains to say here, look, the bank's actually done very, very well, but we're selling it. The cash injection, I don't think, is important. But and the overseas acquisition of Citron, I mean, this is good. That's right in their backyard. It's what they do, and they do it incredibly well. And the reason why I'm buying it is basically on the back of this is a good, solid SA Inc. share that's still very reasonably priced in my view, and I think it can benefit from hopefully some turnaround in the SA economy, but more importantly, some turnaround in the rating of SA Inc. shares. So, I mean, that's why I'm picking it as my share pick.
And the acquisition of Citron, which is a hygiene services company works out of the US, based in Canada, in the US, and also in the UK. It's not material to their, so they haven't disclosed. And that to me is also important, that Bidvest does these deals that are, they're not bet the farm kind of deals that are huge and share price moving because you have to pay so much money for them. They do these steady
acquisitions. That's why they are. Yeah, and I mean that's why they are one of. I mean, obviously I'm talking Bidcorp now, but it's all from the same source. That's why they are one of the very, very few successful South African companies to go overseas. Is they started small. They checked the market out. They never bet the farm.
I think Wayne, it's a bolt-on. The Citron is a bolt-on acquisition. Fits in with Steinhoff. That was a bad slip. All the time with Steiner. It fits in with Steiner, but I agree with Wayne. I think they're very cautious about this. And remember, Bidvest never went offshore. It's only now that it's starting to move offshore outside of South Africa. All the operations were within. The bank as well was more trade bank, and they haven't got the retail base. Everyone's going for the retail. And I think that's where the growth is, more in the unbanked communities. And so I think it's very difficult for them. They do their turnover, they do what they have to do, but it's much more of I don't know how you classify it, a commercial, more a commercial corporate bank rather than, a retail bank. So they've done, what's it going to do? It's not going to add much more to them.
Yeah. And I suppose it just takes up management time and resources. I was wondering, maybe one of the contenders to buy it could be African Bank, because they are trying to sort of build themselves up, and they bought parts of Sasfin's business, and they also bought Grindrod Bank, wasn't it?
Yeah. So, but Wayne's absolutely right in this, in the respect of running a bank is mad. The amount of regulation, the amount of time that it takes. So hand it over to African Bank. They're still trying to build up. So, they will start to buy assets and probably could be, buyers of the bank, or I don't know who. I don't know if they announced anything.
No, they haven't. So
the market just brushed both of the deals aside. And it came down slightly, 0.5%. So there wasn't much of a reaction.
Okay, moving on. A question on whether you would buy Prosus or Naspers. Or if at all, indeed, at this point. Wayne.
Who are you asking?
Wayne first.
Yeah, look, I still think they show value. Obviously, the share price has done, quite nicely. Man, I think I'll still go for Naspers because I think there's still more of a inherent discount to NAV, but obviously the discount is significantly less than what it was, a couple of years ago. So I'll still go for Naspers. I mean, the China shares could still have a very nice turnaround. Chinese economy, when you look at the Chinese property market, I mean, they've had a torrid time for a number of years now. And obviously lower global interest rates and global growth picking up will obviously benefit China. So, I would go for it. I don't know if it's the most exciting share around at this price. But certainly, when you look back on the history of Naspers and Prosus, I mean, the shares are doing what they should do. They've gone from a 70-80 price earnings ratio many years ago to a 20 price earnings ratio. So they are reflecting the underlying earnings better than what they used to. And these are still good companies. And of course, you've got the Chinese upside as well. Yeah. So, I would buy it.
Okay, so but Naspers would be your pick?
Yes.
David, do you have anything to add there?
Not really. I just think they came out clean, during the week. I don't know if you picked it up, starting to admit that they had some absolutely awful, the new management, had had done some awful deals. And it was in Business Day. It was an interview in Business Day, and admitted that they'd got it all wrong and wasted a lot of money and so on. And they're not going to do that again. And I think that's the best news you could get, that they're not going to do any more deals. Just stay where they are and ride the 10-cent gains. So Juliet, if you
are we talking about under Bob van Dijk's tenure? He was so richly rewarded.
Yeah. You've got no idea.
I mean,
for losing so much money, and that's what I love about corporates. You can write off billions, and you still get your salary, and you still get your
share of awards,
your leave pay. So I mean, when you look, and which they admit, how much they wrote off. So I think if they leave it alone now and just let Tencent add to its value, because Tencent is not starting to show some good signs as well. So I'm with Wayne. You're going to get Tencent coming through without them wasting money on everything else. So,
but then maybe you take a bit more of a dogmatic stance at the AGM when it comes to the executive remuneration.
You can criticize as much as you like. It's difficult to predict the future. At least they got Tencent, eh?
Yeah, no, you have to hand it. That's all they should have done. That's why I keep saying, that's all they should have done.
Now look, I mean, the new management has totally altered the old business model. Totally altered the old business model.
Yes, I can imagine Bob van Dijk. I wonder what he thinks. I remember him being very defensive when we interviewed him a couple of years ago about whether he was worth his salary. And he said, well, he works 80 hours a week, but maybe he should have just done less.
He should have just done 1 hour, yeah.
And they were very lucky.
A lot of money, yeah.
And they were very lucky that Just Eat thing didn't work.
Yeah, just do less. It's our motto on the show. On that note, actually, I have to ask you about. There seem to be rumblings from within the Joe Biden camp that maybe the president is going to acknowledge that he is not fit for the task. Do you think US politics could scupper the markets in any big way heading into November, or indeed after November? Ask David this first.
No, I don't. There might be the odd day or two where there are reactions and so on, but overall, I don't think it will have any effect. If anything, I think after an election, after the uncertainty is removed, you normally get markets recovering. But for the meantime, I think markets are beginning to discount a Trump victory with his tariff increases and tax reductions and so on, which might be inflationary and whatever. I think during, there was a little bit of a disruption over politics last week, but this week we're back on the road. Tomorrow's Yankee Doodle Dandy Day, the 4th of July, and everybody's waving their flags. But markets just carry on.
Yeah. And of course, it's the UK elections tomorrow.
Yeah.
Yes. That should be interesting.
Yes. There were lots of very naughty posters. See you next Thursday, they said, about Rishi Sunak. So I should get to your stock picks. Wayne, we've had yours, which is Bidvest.
Yeah.
So David, you can talk at leisure about yours. So you better have a good pick and a good business case to make.
Now, I've gone back to tech. I just think that we're in for another strong run in tech in the next 6 months, and that's going to drive markets. I think it's most of the analysts, most of the strategists have completely underestimated, what those technology shares have added to the US economy. We're going to go into a period of reduced rates, which is going to give some kind of underpin to the other stocks, but it's going to be tech that leads. And the fact that NVIDIA is held up at these levels, unfortunately, when I say unfortunately, because it's up, I see 4% as we talk now, it's back on the run. I think it's time to take a nibble at that again.
So you would be, if you had new money, would you put it in NVIDIA? I mean, I think this is the dilemma. That's it's the Capitec dilemma or the AfriMat dilemma. Do you just carry on buying?
I labored over it. I wrote an article, Business Day, in my column about it. I'm saying, because what's the difference? Don't go to other AI, because if NVIDIA falls, everything else is going to fall as well. So you may as well stay with NVIDIA. If NVIDIA can't make the cut, then I think Amazon and Alphabet and all of those are also going to come down, AMD, and everything's going to tumble. So you may as well just go for the ride and buy NVIDIA.
Okay.
I'm not convincing.
Well, it's a bit scary, really. So at least we have Bidvest, solid and not overly expensive Bidvest to placate some of our greater worries. David, Wayne, we shall leave it there. Thank you very much for joining us as always on the show. Wayne McCurrie is from F&B Wealth and Investments. David Shapiro is from Sasfin Securities. And up next we have The Close. Stay with us.